This is Jake James Vogel, editor of XGen Investor. And before we start, I just wanted to briefly introduce the episode before our AI hosts take it away. In the past year, I've probably looked at 1,000 10Ks and 10Qs looking for value. I found a lot of companies are sitting on loads of debt, and a lot of companies are overvalued in the markets right now. And that led me to gold miners. In researching gold miners, I found that I could learn a lot from the likes of Adrian Day and Rick Rule in the Rule Classroom for free. In doing so, and also by doing further research on YouTube, I ran into Steve Barton, who's a member of the Rule Classroom and hosts the show In It to Win It. Recently, Steve interviewed Garret Goggins, and I found that interview to be highly informative. Garret discussed three companies I had never really followed before, so I thought it'd be fun in this episode to dive into those three companies and see if there's value there. Again, this is not meant to be investment advice, so do your own research. And if you want to learn more, I'll put a link in the show notes to Steve's interview with Garret. Enjoy it and take care.
Hey everyone, welcome back to the show. And you know what we love to do here? It's deep dives. And today we're going to do a deep dive into the junior gold miners.
Yeah.
And we're going to use a source that's really interesting. It's from Steve Barton's In It to Win It podcast.
Yeah, Steve Barton, a legend.
And he had Garret Goggins on the show, and Garret Goggins is a mining expert. And he picked three companies that he is really liking. And we're going to deep dive into those three companies.
Absolutely. And we're going to compare them on their projects, their financials, and their market cap compared to their NAV and NAV at current gold prices. So there's going to be a lot of good stuff in this deep dive.
Okay, so the first thing before we get into those three companies is Garret Goggins has some pretty interesting observations about the junior gold space in general. What jumped out at you?
Oh, Garrett's super bullish right now, and he sees a real opportunity for outsized returns because the market hasn't fully recognized the potential of these junior gold miners.
Okay, and he mentioned that many of these companies are operating in these kind of challenging jurisdictions, places that a lot of people just wouldn't want to go to.
Yeah.
Do you think that has anything to do with why they might be undervalued?
Absolutely. I think the market is pricing in that perceived risk, and those jurisdictions are often kind of overlooked. But that's where the savvy investors are going to get their outsized returns.
I think it's so fascinating, this concept of risk.
Yeah.
Sometimes the higher the risk, the higher the potential reward.
Yeah.
So with that in mind, let's get into those three companies that Garret Goggins picked. And he started off talking about Rio 2 and their Phoenix Gold project in Chile.
Yeah, Rio 2 is an interesting one. They're dealing with high altitude, 4,600 to 4,900 meters above sea level, significantly higher than most other Chilean gold mines. And that impacts their operations, particularly the heap leach part.
Okay, so for people who don't speak mining, can you break down what heap leaching is and why altitude matters?
Sure. Heap leaching is a gold extraction method where you crush the ore and then you essentially pile it up and you use a solution to dissolve the gold.
Kind of like brewing a giant pot of gold-infused tea.
Yeah, so high altitude really matters because you got freezing temperatures that can impact that solution. It can freeze up the pipes, you got to bury everything. It adds a lot of complexity.
Oh, wow. That makes sense. So it makes it more expensive and challenging.
Yeah, absolutely. And it's similar to what they have to do in Fort Knox, Alaska, which is a mine that operates in, very cold temperatures as well.
And just to add on to the complexity, they had to halt the project in 2022.
They did. There were some disputes that needed to be resolved, but they are working to restart construction.
And this is where the opportunity lies, because they're currently trading at about 0.25 times their estimated NAV.
Right, which is super low compared to the typical 0.5 to 0.8 times multiple we see for other single asset developers, companies with one big project like Rio 2.
So there's a possibility of a huge re-rating, right?
Absolutely. Garret thinks so, and I do too. It's a contrarian play for sure, but that's where the big gains are going to be.
I love it. Okay, now, the second company that Garret Goggins mentioned is Sanu Gold, which is in Guinea, West Africa. And that's a region that, doesn't always have the best reputation, right?
Yeah, it's had its ups and downs, but it's also a top 20 global gold producer. And we've seen a huge surge in foreign investment in the mining sector over there.
Oh, really? Give me an example.
Yeah, so Rio Tinto has committed $15 billion to the Samandu iron ore project in Guinea.
Wow, 15 billion. That is a lot of money.
Yeah.
And that says a lot about the changing landscape in Guinea. So what's Sanu Gold up to over there?
Yeah, so they've got 3 projects, Banta Bay, Dana, and Digifara. They're all still in the exploration stage, but they're hitting some really high-grade discoveries.
Okay, now you got to explain that for the listeners because I know what high grade means, but
Yeah, of course.
some listeners may not.
So high grade basically means a higher concentration of gold in the ore, which means higher potential profits down the road. It's a really good sign.
That's a great sign. Okay. And isn't their Digifara project right next door to the big Anglo Gold Ashanti Sigiri mine?
It is, and that's a massive 6.2 million ounce mine, producing over 221,000 ounces of gold annually.
That is huge. So being near a proven and profitable mine like that has to add to Sanu Gold's appeal.
Absolutely. It's all about location, location, location in real estate and mining too. And on top of that, they've got some serious financial backing.
Like who?
Oh, they've got Lala Resource Commodity Capital and a really tight insider founder holding structure. So they've got the money and the team to really make a go of it in Guinea.
So it sounds like they've got a lot of things going for them. Okay, so the third company that Garret Goggins mentioned was Montage Gold with their Koné Gold project in Côte d'Ivoire. And they seem to be a bit further along in the development process than the other 2 companies we talked about.
They are for sure. They completed an updated feasibility study in January of 2024, and their estimated NAV is a whopping $2.374 billion based on their current resource estimates.
But their market cap is nowhere near that.
You're exactly right. It's only around $435 million, giving them an NAV to market cap ratio of over 5.
So the market is valuing them at a fraction of what their assets are potentially worth. Why is that?
Well, there's a few reasons. First, they're still a pre-production asset, which means they haven't started producing gold yet, and there's always execution risks involved with bringing a mine online.
So the market is saying, we're not sure if you're going to be able to actually do it yet.
Yeah, they're saying we believe in the potential, but we also know things could go wrong.
But obviously Garret Goggins sees something special in Montage Gold. What is it about this Koné project that's so compelling?
Well, they've got almost 5 million ounces of gold in indicated mineral resources, which is a lot, and they're making tangible progress towards production.
Oh, really? Like what?
Well, they finished the geotechnical drilling for the haul road, which is key for transporting the ore. They've done ground geophysics for water exploration. They're currently tendering key work packages like the mining contract and the EPCM contract, which covers engineering procurement and construction management.
Okay, so they've ticked all the boxes that they need to tick to move this project forward.
They have, and that's why this discrepancy between their NAV and market cap is so interesting. If they can execute on their plan and deliver on the promise of this Koné project, there's a huge potential for re-rating.
So they could potentially go way up.
Way up, and that's what Garrett's banking on.
Okay, so we have 3 companies, all very different, all at different stages,
Mm-hmm.
but they're all junior gold miners with the potential to really make some money.
Right, that's what makes this space so exciting. It's all about uncovering those hidden gems that the market may be overlooking. And we're going to take a deeper look at each of these companies' financials and valuations in the next part of this deep dive, so stay tuned.
That's right. We're going to get into the nitty-gritty of the numbers and really see if these companies live up to the hype.
Okay, so let's get into the financials, and I think it makes sense to start with Montage Gold. You know, we were just talking about their impressive estimated NAV of $2.374 billion.
Yeah, 2.374 billion. That's a lot of billion.
A lot of billion, but how are their actual financials looking? You know, what should investors be paying attention to?
Yeah, so their latest financial statements kind of paint an interesting picture. Their revenue for the third quarter of 2024 was zero.
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 Well, that's not uncommon for a development stage mining company. You know, they're not pulling gold out of the ground yet, so there's no revenue coming in. It's all about investing in the future.
Yeah, so they're not making money yet, but are they at least profitable on paper? You know, what about their net income?
Not quite, actually. They reported a net loss of $110.3 million for the quarter, and their operating cash flow is negative as well.
So they're burning through cash, which isn't totally surprising. You know, they are doing a lot of work on this Koné project, but it's definitely something to keep an eye on.
For sure, it really underscores how important it is to understand their funding sources and, you know, how much cash they have left to keep going.
Right. How long is the runway?
Exactly. And fortunately, Montage Gold has been pretty active in raising capital. In August 2024, they issued over 102 million common shares through a brokered private placement.
Wow, that's a massive share issuance.
It is.
So can you break that down for the listeners? What does that mean for investors?
Yeah, so basically they're creating new shares and selling them to raise money, which can dilute the ownership of existing shareholders because now there are more shares in circulation. Think of it like cutting a pie into more slices.
So it gives the company the cash it needs to fund its
Hmm.
projects, but it also means that each existing share represents a slightly smaller piece of the overall company.
That's right. It's a trade-off that investors need to understand. In the junior mining space, the potential upside of a major discovery can be huge, but there's also the risk of dilution.
And I noticed in their financial statements, they had that standard disclaimer, the one that says investment in our company is speculative with a potential loss of the entire investment.
Oh yeah, for sure. It's a good reminder that junior miners are risky, especially those that are still in the development stage.
High risk, high reward.
Absolutely.
So what's the bottom line here for Montage Gold? What are the key takeaways?
Well, they have a really promising asset with that Coney Gold project, but they are still in the early stages. They're spending a lot of money relying on equity financing, and they're not generating any revenue yet. It's high risk, high reward for sure.
Okay, so let's move on to Rio 2.
Mm-hmm.
We were talking about how they're valued at a big discount to their estimated NAV,
Right.
but their situation is a bit more complicated. They're not just pre-production. They actually had to stop construction.
Yeah, that construction halt definitely adds another layer of uncertainty for sure, but they're actually generating some revenue, which is interesting.
Really?
Yeah, through a deal with Wheaton Precious Metals International.
Okay, hold on. How can they be making money if construction is stopped?
So they have this agreement called a Precious Metals Purchase and Delivery Agreement. And basically, they got an upfront payment for future gold deliveries, and that's recorded as deferred revenue on their books.
Oh, so it's not revenue from actual sales yet, but it's still a positive cash inflow.
It is, and it's a clever way to secure funding while they work on getting the project back on track.
It's like a big vote of confidence from Wheaton Precious Metals, right?
Exactly.
So they got this upfront payment, but are they making any money on these precious metal deliveries? What's their profitability looking like?
Not yet. They actually reported a net loss of over $9 million for the first 9 months of 2024, and their operating cash flow was also negative.
So similar to Montage Gold, they're still in that spending phase, relying on external financing to keep things going.
Yeah, but we have to remember that construction pause has impacted their financials. Their success is really going to depend on their ability to resolve those disputes and get that construction going again.
But, Garret Goggins seems to have confidence in them, and that low NAV to market cap ratio is still very attractive. It feels like there could be a huge upside.
Yeah, it's a good story, a compelling story.
Okay, so let's wrap up our financial deep dive with Sanu Gold, our exploration play in Guinea.
Right.
Now, they're not making any money from gold sales yet, are they?
Not at this stage. Their main focus is on proving out the potential of those discoveries, you know? So it's all about exploration right now.
Okay, so how do we even evaluate a company like that from a financial perspective?
It's definitely different than looking at a company with an existing mine or a project that's close to production. We don't have detailed public financials for Sanu Gold, but we do know they have funding from some really reputable places like Mara Resource and Commodity Capital.
Yeah, and those are not your average investors. They've got a good track record of backing successful mining companies.
Yeah, they do, and that gives us a lot of confidence in Sanu Gold's potential. It tells us they have a solid financial foundation to continue with their exploration work, and we can't forget about those high-grade discoveries at their Banta Bay and Dana projects. That's what makes them stand out.
Yeah, it's a classic exploration play, high risk, high reward. It's like searching for a needle in a haystack. When you find that needle, it can be life-changing.
You got it. And that's what gets investors excited about this space, the possibility of uncovering the next big gold deposit.
So let's just recap our financial overview. Montage Gold is spending heavily as they move towards production.
Yeah.
Rio 2 is facing a temporary setback, but they have a good asset and that interesting financing deal with Wheaton Precious Metals.
Right.
And then we have Sanu Gold, our exploration pure play, with strong backing and those very exciting early-stage discoveries.
Each company has its own opportunities and risks. It's all part of the game.
Okay, so we've covered a lot of ground today. We've looked at Rio 2 Sanu Gold and Montage Gold. We've talked about their projects, their financials, what makes them unique.
Yeah, it's been a great deep dive.
And, we've seen that each company is at a different stage of development, but they all offer a unique way to tap into the junior gold space.
For sure.
But as we've been saying, it's not for the faint of heart.
Not at all high risk, high reward.
So let's play devil's advocate for a second. What could go wrong? What are the potential risks that investors should think about?
Well, there are always the big geopolitical risks, things like changes in government policies, instability in the regions where these companies operate, or even a global economic downturn, those things can really impact these companies.
Right. These aren't huge companies with tons of money and years of experience. They're going to be more sensitive to those kinds of changes.
Exactly. And then there are always project-specific challenges, permitting delays, environmental concerns, unexpected geological issues. Any of those things can really throw a wrench in the plans.
And those things can be expensive and time-consuming to deal with, especially for companies like Rio 2 and Montage Gold that are further down the development path.
Yeah, absolutely. And we can't forget about technology. What if there's a new breakthrough in gold extraction that makes these traditional mining methods obsolete?
Oh, wow. Yeah, the mining industry is always changing. What's cutting edge today might be old news tomorrow.
For sure. So while Garret Goggins is bullish and his insights are valuable, it's really important to remember that there are risks. You
Yeah.
do your own research. Don't just rely on what one person says.
Especially in the junior gold space.
Absolutely.
Knowledge is power.
It is.
Okay, so we always encourage our listeners to learn more, do their own research, explore these companies and the broader junior gold market.
Yeah. And if you're interested in learning more from Garret Goggins, check out his interview with Steve Barton on In It to Win It. And for a deeper dive into all of this, join Steve in the Rule Classroom.
And remember, as always, this is not investment advice. Do your own research before making any investment decisions.
Absolutely. Happy digging, everyone.
So we've covered a lot of ground today. Rio 2, Sanu Gold, Montage Gold. We've looked at their projects, financials, what makes each of them unique, what makes each of them tick.
Yeah, absolutely. And I think, what we've seen is each company is at a different stage, but they all offer a really interesting way to play the junior gold space.
But as we've been saying, it's not for the faint of heart.
Not at all. This is high risk, high reward.
Yeah. So let's play devil's advocate here for a second. What could derail Garret Goggins's pretty optimistic view? What are some of the risks that investors need to be aware of?
Well, there are always the big picture geopolitical risks,
Mhm.
changes in government policies, instability in those regions, even, a global economic downturn.
Yeah.
Those can all really impact these companies.
Yeah, these aren't, big companies with tons of cash and years of experience.
Mhm.
They're going to be a little bit more sensitive to those kinds of changes.
For sure. And then there are the more, project-specific challenges, permitting delays, environmental concerns, unexpected geological issues. Like, you just never know what's going to happen with some of these projects.
Right, and those things can be expensive and time-consuming to deal with, especially for companies like Rio 2 and Montage Gold, who are a little bit further down the development path.
Absolutely. And, we can't forget about technology. What if there's some, breakthrough in gold extraction that makes these, traditional mining methods obsolete?
Oh, wow. Yeah, the mining industry is always changing. What's cutting edge today could be old news tomorrow.
Exactly. So, while Garrett's bullishness is exciting and his insights are valuable, it's really crucial for investors to, consider these risks and do their own research.
Absolutely. You got to do your own homework.
Yeah. Don't just rely on one expert's opinion, especially in this space.
Knowledge is power.
That's right.
And we always encourage our listeners to learn more, explore these companies and the broader junior gold market, dig deeper.
Yeah, and if you're interested in learning more from Garret Goggins, definitely check out his full interview with Steve Barton on the In It to Win It podcast. And for an even deeper dive into, all of these concepts, join Steve in the Rule Classroom.
Yes, and as always, this is not investment advice. Do your own research before making any investment decisions.
Absolutely. Happy digging, everyone.
All right, thanks for joining us for this deep dive.
Yeah, thanks, everyone.